Hello and welcome to the CNBC-TV18 Mumbai studio. I'm Ekta Batra and you're watching Your Stocks this afternoon. Well, joining us today, we have Parthiv Shah, who is the director at Tracom Stock Brokers, and Rajat Bose of rajatbose.com to answer all of your stock queries. Parthiv as well as Rajat, welcome to the show. Well, we do have a lot of earnings which have been trickling in. We do have Bharat Dynamics, which is on your screen, net profit up around 61%. 135 crores versus 84 crores on a year-on-year basis. So that set of numbers actually looks good. Revenue up around 30% on a year-on-year basis as well. So that's Bharat Dynamics for you. Stock is seeing a gain of around 2.5% reacting to the preliminary Q3 numbers. But overall for the markets, we have seen quite a choppy day. It's been up and down for the markets in what has been a tight range. So the Nifty is currently up around 87 odd points. We have the Bank Nifty, which is still reeling under pressure. So that continues to be a pressure point. But the mid caps have definitely picked up pace. So the mid cap index is seeing buying even at lower levels. So it's up around 1% at this point in time. Picked up around over 500 odd points as we speak. But before we get started in terms of queries, Rajat, just wanted your quick take in terms of the markets. Yesterday was an extremely down day for us. We saw a strong amount of FII selling as well. But today there is some amount of recovery which is taking place and buying at lower levels. So how would you approach this, the screen?
Well, as far as the Nifty is concerned, I would say that this is a minor recovery compared to the fall that we saw yesterday. And the 9-day exponential moving average is at 21,525, and currently it is about 200 points lower than that. So unless that moving average is reclaimed, because that is the support that has been working for so long, and now after that island reversal which I referred to last week, after that you require a real good move on the upside, which would take the Nifty beyond 21,625, which is above the 9-day and 20-day moving averages. If that were to happen, then this was a minor correction. But looking at the Bank Nifty, it doesn't appear to be a minor correction, because Bank Nifty for a minimum needs to take out 45,250, 45,500, that kind of levels. And if it were to go down below 44,500, then there will be more problems. So long as HDFC Bank doesn't fall below 1440 and stays there, at least there is some hope that Bank Nifty will try to show more recovery.
Okay, all right. Well, let's get in a couple of queries now. We have our first query from Sheikh Mohammad Rafi, who writes to us from Hyderabad, holds 50 shares of Laurus Labs, which he's bought at around 408 odd rupees. He wants to know what to do, whether he should hold or sell at these current levels. Well, the numbers are today. The stock is managing to hold up ahead of its numbers, Parthiv. You know, there's been a lot of talk in terms of the margin pressure they faced, as well as the base business. And they haven't provided any kind of guidance, despite the fact that second half is likely to be stronger. In that context, what would you recommend, on this investment?
Good afternoon, Ekta, Rajata, our viewers. Ekta, this is talk of entirely your domain, and you have been guiding us quarter on quarter on this talk. But I think if you look at the past commentary, I think it's not that the management had any wrong intentions. It's just that they were a little more upbeat on their business prospects, especially the CDMO capacities. And the guidance for the past 3 quarters have kind of gone wrong because of some demand destruction in some of the key products. As a result of which, I think the stock has been languishing and not even gone close to its new highs at a point in time when we are seeing that there's huge traction in the pharmaceutical sector. But I think this is a company that we like for slightly longer term investment, hoping for the fact that today when they report the numbers based on what the con call commentary was, that from H2 there could be some sort of recovery going. I think we are seeing a similar trend from many of its peers like Piramal Pharma, where they're talking of the CDMO side of business kind of improving. And I think Laurus has one of the finest capabilities in terms of CDMO. Not only that, I think they have been focusing on a lot of new immunoact sort of therapies, which are kind of really having very huge potential. They have very decent ANDA pipeline, which could fructify over the next few quarters. So I think we believe that the worst could be probably over for Laurus, and probably the investor is better off holding the stock for at least next 1 or 2 weeks.
Okay, all right. Any call on the technicals of Laurus, Rajat?
Well, I would say that I broadly concur with Parthiv because, see, we had been seeing some kind of a corrective swing that has been there since the top was made around 2nd of January at 444. From there, it has come down quite a bit. Laurus Lab has a major support zone between, say, 393 to about 375. Unless this range is violated, I would say that one should continue to hold on because this is this is actually moving in a sideways market where the current price is actually closer to the lower boundary. So here one should not be getting out. One should continue to hold on, but do not buy afresh. At least that kind of a buy signal has not yet come.
Okay, all right. So Laurus Labs has recovered at least in the past couple of months. But let's get in another caller now. We have Shailendra Singh, who's on the line from Bhubaneswar. He has investments in Zen Technologies. Hi, Shailendra.
Good afternoon, madam. Thank you.
Afternoon. Tell us.
Madam, I'm having 2,500 shares of Zen Technology at the rate of 450 rupees. So I can hold for 1 year. So I want to know from fundamental point of view, is it okay to hold on?
Okay, all right. Well, you are sitting on a good amount of money. How long are you willing to hold it for, Shailendra?
Madam, I can go beyond 1 year, 1 year, 2 years.
Okay, 1 to 2 years. So that's the time frame. Rajat, what would you recommend on Zen Technologies? Sitting on a good amount of profit at this point in time for Shailendra, he's okay to hold it for a year, 2 years. What would you recommend? Do you expect further upside on the stock and maybe it's a hold or maybe book partial profits?
Although there are some distribution signs in Zen Technologies, but I would say that since the investor is willing to hold for a year and even more, in that case, unless the 200-day exponential moving average, which is currently at 628, at least it should, once it pierces that and stays there, then you can think of booking profits or getting out of it. Otherwise, one should continue. I would suggest a stop loss of 600 rupees for Zen Technologies, even if he thinks that he would hold it for longer term. But below 600, it will become very weak.
Okay, all right. Anything on the fundamentals, Parthiv, you would recommend?
Ekta, I would be very skeptical to suggest a hold on Zen Technologies, especially at these elevated valuations. If you see, it's, I think, quoted at a trail P multiple of 67. And I think one of the reasons why we have seen a stock like Zen Technologies get re-rated is because it's considered to be a defense sector proxy, where they have two key products. One is the training simulation equipment for the defense, and the second is the counter drone solutions that they provide to the Indian Defense Force. Not only that, I think they also have AMC contracts. But if I look at the current order book run rate, they're sitting on 1,000 crores worth of order, where around 190 crores are for the asset AMC. Our sense is, I think, even if they were to grow over the next 2-3 years at the rate of 15% and maintain the current margin run rate, I think still the valuations look elevated, which should probably keep a cap on the upside. And there could be a potential downside if at all there are some execution problems in upcoming quarter. So probably, I think, not a bad idea to book profits out here in Zen Technologies.
Okay, all right. Well, let's get in another query now. We have Vijay Lakshmi, who writes to us from Tamil Nadu. She holds 50 shares of Mastek, which he's bought at 2,300 odd rupees. She wants to know whether to book her profits or to stay invested. Well, sitting on a profit on this one as well. This is on Mastek. Parthiv, let's go with you on this one. What would you recommend? Maybe book some partial profits. What's your approach on mid-cap IT?
I believe long-term prospects for Mastek look good. I think if you look at their TCV, they're sitting at around $193 million, which is a pretty decent run rate. Their execution track record has been pretty good, and they've done reasonably well in terms of constant currency growth and also held up the margins pretty well. What we like is that segment-wise, they have very nice distribution in terms of digital application cloud. They're almost 45%. Oracle Cloud Enterprise Solutions that they provide is almost 33%. The digital commerce and experience is around 13%, and the data automation and AI is almost 9%. So I think their business verticals are kind of doing reasonably well, despite all the challenges that many other mid-cap IT companies are facing. Our sense is, thanks to the fact that the valuation comfort is also there in Mastek, we would suggest a hold for longer term.
Okay, and Rajat, what's your opinion on Mastek? In terms of fundamentals, last quarter the profit was up around 20 odd crores. They did announce a 7 rupee dividend as well. But overall, in terms of the technicals, what would you recommend?
Technicals are deteriorating, but I wouldn't suggest an immediate exit. There could be a bounce maybe tomorrow that can happen because a hammerline information today, if it were to cross 2780 to about 2840, that this is the critical zone for Mastek. If it were to move above 2840, then one should hold on. Otherwise, if it fails to take out even 2780, one should actually exit this stock because it would weaken if it doesn't bounce back at least within the next 5 trading sessions.
Okay, all right, fair enough. Well, we have a couple of queries left as well, which we need to address in the midst of earnings season. As you can see, another set of earnings which are flashing on your screen. Redtape EBITDA is up around 21% on a year-on-year basis. The stock, as you can see, is up around 1%. There's a little bit of a flattish or lower margin performance which has come through. We need to take a break, but as we do that, Money Control, this is a quick update on that, has beaten the Economic Times, making it the clear digital leader in business, markets and finance news in India. It has surpassed ET in major rating categories according to the latest viewership data from Comscore, which measures digital readership. Money Control has dislodged ET as the #1 in terms of unique visitors. It's double in terms of page views to ET, showing far greater stickiness. Money Control is also more than 4 times of ET in terms of time spent, showing much greater engagement. Welcome back. No incremental update on the markets except for the fact that the mid-cap index has picked up a little more pace. So at the high point of the day, up around 1.2%. Let's see whether there's any kind of profit booking in the last hour of trade. But as of now, it seems to be holding with a positive advance decline ratio as well. Over 2,300 stocks advancing, close to around 1,600 stocks declining. So 1:1.5 to 1 is where the ratio stands on the Bombay Stock Exchange. Well, let's get in another query now. We have Vivek Verma, who writes to us from Mumbai. He holds 2,000 shares of Angel One, the stockbroking company, at 1,500 rupees. He's asking if he can hold the stock for the long term. Well, interesting question there, Parthiv. I'm going to put it to you. And before that, wishing you a very happy birthday as well. Just wanted your thoughts on Angel One. Considering the fact that, it came out with what was a mixed set of numbers, the margins did see a sharp contraction. In that context, do you think that it would be a long-term buy? Do you expect the volatility in numbers to continue?
Thank you very much, Ekta, for your good wishes. Yes, I think the last quarter, as you rightly pointed out, really spooked the market. Prior to that, I think the way they were gaining traction in terms of market share gains, they'd added almost 1 million clients in the last month, and the entire quarter they added 2.5 million clients. But I think with the results and the margins, I think the stock massively corrected from the high levels of 3,800 to almost 2,900. Our sense is, I think probably the investors should hold on to this position. I think they're making stupendous efforts to, despite the fact that there are increase in the cost, but these costs more are front-loaded for future prospects. And I think they're trying their level best to have more better experience in terms of the super app that they're developing. And we like in terms of technologically things that they're doing. And I think the way they're garnering market share and the way they have the strategy going ahead, our sense is probably it will be a good hold for long term. Luckily, I think after this massive fall, I think the valuations are not very demanding. It's quoted at around 18 times forward. And our sense is, I think the equity market is yet to grow and grow further. And probably we might be talking of a client database of almost 15 crore investors. So in which case, I think if Angel were to even retain its market share, probably a lot of volume growth is still pending. So suggest a hold here.
Okay, well, we were talking about Angel Broking and the kind of disappointing numbers they came out with. But the other one which is joining it is Sharda Cropchem. It's a 900 basis points fall that they've seen in terms of their margins on a year-on-year basis. Completely disappointing in terms of a reaction. As you can see, the stock is down around 5% odd. The margins have come in at around 11% for the quarter versus 20% on a year-on-year basis. But that's on Sharda Cropchem. Any thoughts on Angel 1 in terms of the technicals, Rajat, considering that the buy price of the person asking the query was around 1,500 rupees, so still sitting on a good profit there?
Well, this is the second week in succession that Angel has been falling, and it is a big fall from the top of about 3,800 to currently below 3,000. So since he has waited for so long, I would say the key support level would be 2789. If it were to fall below that and closes there, then one should actually consider booking profits. Otherwise, give it a chance. Maybe this will give a bounce. But unless it takes out 3250 to about 3,300, even on a counter trend rally, one should actually book profits because Angel's chart structure has become very weak.
Okay, all right. So that is on Angel 1. Let's get in another query now. We have Naveen who writes to us from New Delhi, holds 200 shares of ITC, which is bought at over 415 odd rupees to be precise. So good profit there. And 1,000 shares of Tata Power, which is bought at 203 rupees. He wants to know what to do to book his profits or stay invested. He asks if he can buy more ITC shares as well. Well, Rajat, would you like to come in on this one?
I would say one can buy ITC at current levels of around, say, 461, put a stop loss below 445, and I'm looking at first initial target will be 473, then 485 and 499. That was the 499.70 is the all-time high. ITC is not looking that weak. So I would suggest one can buy ITC. And regarding Tata Power, I would say that unless it falls below 340, it doesn't weaken much. So you can hold it with a stop below 340, but no fresh buying in Tata Power.
Okay, all right. Well, Parthiv as well as Rajat, thank you very much for joining in and taking us through all of your calls. And Parthiv, have a good day on your birthday. That's all the time that we have on the show. But do remember to email us your questions and we will address them with our experts. Stay tuned for Closing Bell. Take you through the last hour of trade.